Let's stick with the markets now. Bring in Eva Ados, COO at ERShares. Eva, great to see you. We're anticipating another hot inflation report tomorrow. What are your expectations? And do you think the market has already baked in a pretty hot report?
Well, we would like to think that today's optimism, which is highly related to tomorrow's news, COVID regulation news, and buying the dip, is not short-lived. However, even though we see the yield curve start flattening, we're watching very closely the 10-year and the CPI number tomorrow. And there are three factors that we're watching: the costs associated with labor, which is the most important to us, food prices, and of course energy. And so once the 10-year is approaching 2%, once that happens, that will trigger, and if that happens, that will trigger a psychological level and will trigger more anxiety, because then you're watching when will interest rates approach 3%. And we saw this in the international markets. In Australia, for example, when they broke through 2%, then that triggered anxiety in the market. The markets dropped, and if that happens in the US, it will exacerbate volatility in the short term.
So are you expecting the yield on the 10-year to actually touch 3% at some point this year?
So we are cautiously optimistic. We think there's a good likelihood, but at the same time, we are seeing some things on the supply chain front, for example, settling down. So it's really hard to predict things in this market, and you see a difference between the long-term yields versus the short-term. And then when it comes to the market, you also see a big divergence between what's happening. For example, with the FANGs, what happened with the FANGs is the reflection of the broader market. You see companies that are performing great, like Apple and Google, and others that are struggling, like Facebook and Netflix. Among the most highly watched companies in the world, Facebook and Netflix, with so far outcomes that's unseen before. And that gives you a reflection that it's really hard to predict anything in this market.
I want to zero in on tech for a minute, because it really has been the story of two sort of tech worlds, if you will, those that continue to beat by a wide margin, and then those that continue to be pressured by, the specter of higher interest rates and supply chain issues. Which side of the fence are you on, and are you cherry picking that sector right now? And if so, what do you like?
That's exactly right. I think it's a stock picker's market. It's a company by company and case by case assessment. You can't, investors cannot stick to basic themes like we're buying tech or we're buying FANGs or we're buying value or financials. It's really a stock picker's market because, as you said, there are many companies that are struggling with supply chain. They're struggling with their bottom line. So their bottom line has become critically important in this market, even though technology or even financials and any company out there is able to grow their top line, they have not, in some cases, been able to grow their bottom line because they're struggling with labor costs. And a big example of this was the financials. And so it's really key to see, are these companies able to reduce their SG&A? And so as they're growing their top line, are they also able to grow and widen their bottom line? So that's a key thing to watch.
Do you expect the volatility we've seen at the beginning of this year to last through this quarter and even into the second quarter?
Unfortunately, yes. And that's because there are many factors here. You have the geopolitical front where you see conflicts, and if conflicts escalate, that will be detrimental to companies in the energy sector, the chips sector, and the defense area. And so that's a key thing to watch. And of course, the interest rates. And so we don't think we'll see stabilization when it comes to interest rates because the Fed stops asset purchases. But once we see that happening, then the yield curve continues, because it already is flattening. If it continues to do so, we'll see a return to tech, for example, in a big way.
I want to get your thoughts on cryptocurrencies for a minute, because we saw JP Morgan Chase for the first time ever attempt to actually evaluate Bitcoin, the world's largest cryptocurrency. And they said today they estimate Bitcoin's fair value at $38,000, which is roughly 12% below its current price. What are your thoughts on that?
So we have not been investing in cryptos because it's we cannot justify it as an ESG component to our portfolio yet, at least, because of the social issues, the environmental, etc. And however, when it comes to purely investing in it, regardless of whether it's ESG friendly or not, we wouldn't do that yet because there is, again, a lot of uncertainty. We're seeing news of a lot of fraud, especially recently, happening with it. And we're seeing many international markets fighting it in a big way. And so if governments come up with their own digital currency, I don't know how the market will react to the established cryptocurrencies. And so even though they do have a use in the gaming and the metaverse, and I see that going on in the future, I do not see us engaging in our everyday life using Bitcoin, for example.
All right, and just I'm going to give you the last word on earnings here. We're expecting our results from Disney after the bell. Just wondering, how you're feeling about the media landscape right now. You talked a little bit about Netflix. They could wind up being big winners at the Academy Awards in a few weeks.
Yes, we're excited to see it. It's not an entrepreneurial company, so we're not watching it closely. But as you said, Netflix disappointed. COVID is over, and especially after today's news, I think there's more excitement there. So you need to watch the financials, but you also need to understand that our everyday life is changing, and there's a lot of optimism that we're going back to normal, and that in some cases has a negative effect to the so-called COVID stocks.
Yeah, one thing's for certain, and that is change, right? All right, Eva Ados, COO at ERShares, thanks for your insights today.